Hey traders, checking out on the stock market today. Fear out there with a big gap down and complete and absolute bear control the entirety of the day, except for the last 40 minutes where we saw a very significant bounce off the lows and bulls are hoping to carry that momentum into a bounce following through tomorrow. Is that enough of a shift? Let's look at some historical RSI levels as guides. So here is the SPY daily candle, and it doesn't really tell the story of the day. I would look at this candle and I would say, okay, potentially a volume climax, long lower wick, bulls buying the dip, and setting up for the potential of an hourly trend change and bounce follow through tomorrow. When in reality, the bears had absolute full control the entirety of the day, and it was just the last 40 minutes where the bulls finally turned it on and made up for the last 3 hours of complete bear control. They took that away. And really, in the end, the bounce retracement from the low of the day to the high of the bounce at the end of the day, we ended up making back almost 70% of the drop from the high of the day. So what I mean by complete bear control, this really, the 5-minute time frame today reminded me of the BABA drop. When before BABA had bottomed out, it was just absolute bear control. And the bears had control of the shorter term time frames. They just would not allow any budge. And looking at the 2-minute time frame here, you can see it on the way down where we have a clear short-term resistance of 432.70. A bounce attempt. We reject by 1 penny and roll over to a new low of the day. We then have the top of a bounce. It's just a 5-minute lower high. Can the bulls break that resistance? We reject by 5 pennies and roll over into a new low of the day. And then even into the close, we had it again with the top of a bounce. Okay, can we break the high of that bounce? We reject by 7 pennies and roll over into a new low of the day. It was just short-term rejection after rejection. And then finally, just a complete, the switch was flipped and the bulls completely took over into the end of the day. There was no trend change. We just shot straight up off the low. We didn't even change the 2-minute trend. We just, again, it was like someone flipped the buy switch. And what clue for the bears, first thing this morning, we were watching this bull move out of the gate saying, okay, gap down. Can bulls follow through? We've topped out on the initial bounce. We know we must confirm a 5-minute trend change if this bounce is to have follow through. And we couldn't do that. We faded back to the low. But one thing that stood out to me is our major sectors, XLV, XLF, QQQ, they were not all going up at the same time. They were shifting around and bouncing around, and that led to a lack of confidence. At least in me personally, I was not as confident because those sectors were not all the way at the high of the day at the same time. We then dropped with everybody at the low of the day at the same time, and then everybody at the high, or everybody bouncing at the same time. So our major sectors did sync up their correlations. To start the day, they were a little bit inverse and a little bit back and forth, not as clear. But into the end of the day, it was everybody bearish and then everybody bullish at the same time. So what do we need to see from here? We need hourly trend changes. Anything on SPY under the high of today, 436.56, is just a daily lower high. And it's just an hourly lower high. And then we have to hold the low of today and confirm an hourly trend change. It depends where we open. If we open lower, we're going to be battling the low of today as support. And if we open higher, it's the same thing where we know the bulls have to confirm an hourly trend change. So aggressive bears will be watching a higher open for hourly consolidation to shape up. We did finally get SPY monthly consolidation. We lost the pattern of a higher low every single month for the last 11 months. And if you've been watching this channel for months, you know that I am constantly saying, keep an eye out for monthly consolidation. We're overdue. And, people that are asking me about entries, friends that aren't traders, I'm saying, wait for monthly consolidation. It's overdue. And there's tons of space for monthly higher lows. So now the question is, are these going to be monthly bull flags? QQQ, monthly consolidation is not underway just yet. We're on the verge of it. Thought we had. Guess not. But SPY certainly is. So are we going to see a bull flag? We're looking at the retracement from our last monthly higher low. And we can hold, as long as we hold monthly EMA 12, it's a potential monthly bull flag. So from where we stand, we are at the low of today, we are 5% off the all-time high, but we can pull back another 6% before we get to that monthly EMA 12 from where we closed today. So big picture, a lot of names have a lot of space to form monthly higher lows. So I know we're seeing fear and we're seeing these headlines, and we got tapering. We got the FOMC coming up on Wednesday. We've got Evergrande in China is going to ruin the economy of the world. So all these headlines, but I'm ignoring the headlines and watching monthly consolidation to gauge, is this a monthly bull flag or not? And we'll get more and more information about that question on a daily basis. The weekly has lost the uptrend on SPY. We've lost weekly, well, I'm not going to count our chickens before they hatch. We'll see where we close in 4 days. It would be a miraculous recovery if SPY bulls close over the weekly EMA 12 from here. And we're looking at a bounce. And if we bounce, we're looking at a gap to fill at 441.02. But one thing that is notable is during these fear flushes, this one was a little bit different because it was more prolonged. These were fast 3 or 4 day drops before the gap. Again, the gap marked the bottom. So gap down into a 2 day bounce, gap down, 2 day bounce, and it was more than that, but at least a 2 day bounce. Gap down into at least a 2 day bounce, gap down and at least a 2 day bounce. So the question is, do we get that 2 day bounce from here? And then the question will be, can bears confirm a daily lower high and lower low? That would be extremely notable if they could do that. Then we would say, okay, this is extremely different than the last times. As of right now, it's not different enough just yet. There are differences, absolutely. The daily RSI got oversold for SPY today, and we had the S&P 500 futures, the 4-hour and 12-hour RSI were the most beat up that they've been since the COVID lows. So there are definitely differences, but we can forget those differences very quickly if we see 2 green days in a row on a bounce from here. So QQQ weekly uptrend still intact. Higher low was 359.96, and we bounced $1 above that level. Same thing with the hourly, needing a trend change tomorrow if we're going to believe bulls can have follow through. And then we're going to scout a daily lower high, anything under 378.90 on this next bounce. And the bulls are hoping for a big enough bounce to create the space for a daily higher low to form once the bounce tops out. Apple is key to be watching for both QQQ and the broader market. I've said many times it's the most important stock in the market because of how large its holdings are in tech sector ETFs and because how significant the tech sector is in the S&P 500. So right now we have a waterfall stair-step drop where every single day is a lower high. And that's been going on for 9 days in a row. The bulls will break that pattern if they get over 144.84 tomorrow, and the daily bounce will be underway. From there, we will scout a daily lower high, and we will be measuring the retracement size. So let's just say we break that pattern tomorrow. Bulls will have to get, they got a lot of work to do. They got to get back up to 149 if we're going to see a 50% retracement. Like everybody else, we will need to confirm hourly trend changes to believe that this bounce can have follow through. The move was all at the end of the day. And we need more tomorrow. Aggressive bulls are going to be playing off of lows of today tomorrow for daily bounces to play out. Aggressive bears, if we open higher, are going to be watching for the potential of plays off of resistance, the highs of today. Financial sector. So monthly bull flag confirmed with 0 follow through. Weekly, loss of a higher low. And now we're looking down at 34.90 as the most important support level, which is our monthly higher low. So if we lose 34.90, our monthly uptrend is lost. So that is the most important level from here. Big gap down. Dividend distribution did take place as well. But again, we have to see bulls regain the daily uptrend because we are in a daily downtrend at this point. So wherever we bounce, anything under 38.19 is just a daily lower high. And again, with the market just being so used to V-shaped bounces, and once the initial wave of fear subsides, it being home free and just green for the next 2 weeks, anything less than that will again be a big flashing, this time it's different sign. So if we bounce to lower highs and lower lows, pay attention. XLV monthly consolidation is underway. Tons of space for a monthly higher low to try and form. The weekly time frame, losing EMA 12 at the moment. Again, we still got 4 more days. So if we bounce, if we see 2 green days in a row from here, these weekly EMA 12s are going to potentially be in play to hold. Anything under 133.83 is just a lower high. XLV held on a lot better than QQQ and XLF today. And just the percentages, QQQ down 2%, IWM 2.4, XLF 2.3, and XLV was only down 1%. And at one point, it was close to going green. So we're watching to see, do we get bounce follow through? Can we break the highs of today? And can we confirm hourly trend changes back to bulls to indicate short-term fear subsiding? Semiconductor space, weekly uptrend still intact as long as the bulls hold 249.35. That is our last higher low on the weekly. Daily chart, notable gap down today, but it is one of the stronger sectors still. If we look at how far away are we from that all-time high, it is not significant. We're looking at something like 4%. Under 5%. Again, we're scouting a daily lower high to be the result of an initial bounce, but there's not many major sectors that are still seeing weekly higher lows, which is why it does still stand out as strong. And there's an uptrend to be watching here. Bulls are hoping to hold this uptrend support line by the time this weekly candle closes. And checking in on NVDA, it's looking for a weekly higher low as well. Tons of space, anything above 187.62. IWM, weekly higher low, anything above 210.68. We've pulled back more than the bulls would like to see at this point. The monthly time frame, again, we've just been in this range. Look at this one monthly candle back in March, and we've been trading within that one monthly candle the last 6 months at this point. And it's been chopping around where we hold support and reject from resistance and hold support and another rejection. So it is definitely very choppy here. And again, an all-time high would be extremely notable as far as stock market confidence, because these are the higher risk, higher reward names. A loss of the weekly higher lows would definitely be a red flag. Look at the EMAs here, which have been bullish ever since the COVID bounce got followed through. And if we lose weekly higher low support, these EMAs are going to cross bearish for the first time in a very long time. And again, IWM is my gauge as far as the stock world, along with crypto, but just how risk on is the market willing to be? And it stood out Friday. IWM was green Friday, and ARK and the solar sector, there was a lot of growth green Friday while there was weakness everywhere else. And I was watching closely to see, does that carry over into this week? And the answer was no. We pulled back notably in many growth names, along with big tech and everybody else. But there are some setups to be watching on weekly timeframes relative to growth names. Look at the weekly tightening equilibriums that are going to break within the next few weeks. So ARKK has been within this weekly equilibrium. And I got the wrong resistance here, but so 126.32 resistance, and here we are testing support of 113.27 and 113.54. We've been trading within this weekly equilibrium for over 3 months at this point. And the bulls are really hoping to hold this low and remain within this tightening range. We definitely need bounce follow through. Aggressive bulls are playing off this support. And how these weekly equilibriums break are going to dictate direction into the end of the year. We've got 3 trading months, three months and a week essentially, and tightening up for 3 months. So expecting follow through when the break does take place. So key support test on ARKK. TAN, the solar ETF, is doing the same thing. And we're trying to hold this low of 77.20. If we form a higher low, it is possible to remain within these ranges for another couple of weeks. But again, once they break, it's end of the year momentum because they've been forming for months. So 88.22 key resistance, which is almost 10% away. But at this point, the bulls are just trying to hold support and hoping that the broader market can get bounce follow through from here. Another one is airliners, jets. So this is 3 months in the making. Low of the pullback, high of the bounce, held support, reject from resistance, trying to hold another higher low. And again, just the tighter the better, because that tells us volatility is incoming. I don't know the direction that we're going to break, but I know that when we break, we're watching for follow through. And the longer and tighter we get, the better the probability for follow through once the break does take place. So multiple sectors, TAN, JETS, and the ETF ARKK, all on watch for these weekly equilibriums. Biotech sector, trying to set a weekly high or low, anything above 118.49. The bulls must confirm a trend change. Remember, we had that monster bounce from 118 to 136 straight up. But we have to confirm the weekly trend change for the first time. When's the last time we saw a weekly higher low and higher high? It was before the all-time high. Ever since then, every bounce has either led to a lower high or a significant bounce has failed to confirm a trend change. So we have to hold 118.49 and break 136.61 to confirm the first weekly trend change in a long time. So there's a lot of names that are depending on the broader market shaking some of this fear and bouncing from here if we're going to hold these weekly supports. And the FOMC on Wednesday at 2 p.m., we've only got, 8 hours of trading until then. That's going to have a significant short-term impact as to whether or not we hold recent lows or continue weakness. So we have to be watching that reaction Wednesday, 2 p.m. Eastern. The dollar, solid bounce, trying to set a 4-hour higher low to keep the 4-hour uptrend going. If we lose the 4-hour uptrend, we'll look for a daily higher low to try and form. But this is key weekly resistance coming into play. No red flags on the inability to break it at this point. We topped out 28 cents below it. It'll only start to be a red flag if we lose the 4-hour uptrend. We'll definitely be paying extra attention. And again, if you are a broader market bear, there's a number of things that you want to see. You want to see the volatility sector breaking out. You want to see the dollar breaking out. You want to see a rush to the dollar because that means everybody's selling off assets and going into cash. And 93.73 is going to be key. What was happening when we hit that top August 20th? SPY, August 20th, was right down here. So the dollar topping out aligned with the broader market bottoming out. So is the dollar topping out here under that 93.73 resistance? That's the question that we're going to be watching for the rest of this week to help us gauge, can the broader market bulls bounce from here? And if the dollar loses the 4-hour uptrend and starts daily consolidation, we're going to anticipate daily bounce follow through. Like that, or on that note, the VIX, weekly falling wedge broke bull. What have we been saying? The weekly falling wedge will break bull when SPY sees monthly consolidation. I don't know when that is, but when it happens, this weekly falling wedge will break bull. The equilibrium broke bull as well. Bulls have been unable to hold gains on these spikes. The one difference this time around is it is coming off of higher lows. So again, there are enough differences out there from the previous fear resets of SPY over the last 4 months that we do need to be paying attention. We can't get lazy and just assume the bulls are going to buy it again. Because again, there are enough differences where we're paying attention. The other ones were cookie cutter, same setups, same RSI levels, same bounce levels, same 3-4 day drop, gap down and go. This is different. And broader market bulls want to see daily consolidation after today's candle. And you can see, again, the moves are short-lived. They're big and fast, but they've been short-lived. Is it going to be the same this time around? Natural gas daily consolidation underway. We've been looking at the monthly historical RSI levels. So we're watching right now, is this a longer-term top for natural gas? And the reason we're looking for that is because if we look at the last 16 years of price action, we can see that the monthly RSI on major tops happens over 70. 72, we topped out, 73, and here we are this month, 73. We were a bit higher at the high of this candle, but there's enough historical data that we need to be cautious. So aggressive bears are watching for a daily higher low to form on natural gas here, and they're going to scout a daily lower high and try and top fish 564 resistance. And then from there, if we're going to get bear follow through, we would have to confirm a daily downtrend. But that's what aggressive bears are going to be looking for, hoping for bigger picture consolidation. The weekly certainly looks like a volume climax and reversal candle, but we are technically still in a daily uptrend. So that's something to keep an eye on for natural gas. All right, anything less than a solid green day tomorrow is definitely going to stand out to us as far as an inability for bulls to prove bounce follow through. And fear will remain on the table if that is the case. And then it will be up to the FOMC from there. So have game plans for both scenarios. Have long-term buying game plans if you're looking for monthly higher lows. I'm definitely looking for some monthly higher lows in my IRA for longer-term swing positions. Definitely have plans if we see continued fear. What if this monthly consolidation takes us to SPY's monthly EMA 12? That's another 5-6% of downside. And you don't have to feel like, on a day like today, for me, that bounce trading is my bread and butter. I love bounces. And today just wasn't a day for me, just, that end of the day move happening while I was live streaming. That wasn't the bounce I was looking for. But on a day like today, being vast majority cash, I consider it a win. As long as we're in prolonged uptrends, I consider being cash on pullbacks to be a win. If we start, entering a monthly downtrend and a weekly downtrend, then I'll want to be making money as a bear. It's nice to make money as a bear for me and my trading style, but the wins, the big wins, are on the bounces. So for me, I did trade one bounce attempt on CCJ today and ended up scaling out some of the position, but stopped out of the final quarter of that position. And it was a win, but it wasn't anything to write home about. It was a small win. But again, just being all cash today, mostly cash, and not having a big red day, I consider that a win. And now I'm going to be watching for bounce follow through tomorrow to be looking for additional bounce plays. I'm done talking. Do good things. Have game plans for both scenarios. What are you going to do if monthly consolidation continues? What are you going to do if that's our monthly high or low and bulls take over from here? That way, there's no surprises. See you tomorrow.